So can I use equity in one home to buy another one? Great question. This is Matt Helton with OneTrust Home Loans, and in this video, I'm going to share with you how you can use the equity in your current home to buy another one. Because you may be thinking it's a great time to buy a second home at the lake or the mountains, at the beach, or an investment property. Having the income may work, but having enough money for the down payment seems to be one of the biggest struggles homeowners face. And many people just don't want to tap into their 401k or get into their cash reserves right now, but they're wondering, how can I get my hands on the equity I have in my existing home? For some homeowners, they may be able to leverage the equity they've built up in their current home over this great run up in properties to buy another property. There's a few ways you can do that, and in this video, I like to share with you how that works. Now, there could be some tax implications, so please check with your accountant to find out how those work on the tax side. But there's a couple ways you can tap the equity on the mortgage side. The first may be able to refinance your current home in the form of a cash out refinance. So a cash out refinance is where you borrow up to 80% of the value of the home. That pays off your existing mortgage, and then you get your hands on the difference. Now, you can use that to remodel the home. You could use that for a college fund. In this situation, you could use that money on the down payment on a new home. So there are varying requirements depending on lender, so please check with your mortgage lender. I will be able to run those scenarios for you and let you know what makes the most sense. But the interest rates vary depending on if it's your primary home or if it's a rental house. The rates are usually a little bit lower on your primary home than an investment property. But like I said, typically you can borrow up to 80% of the home's value in a cash out refinance. That's the first option to get your hands on the equity. The second option is to do a second mortgage in the terms of a home equity line of credit. Some people call them a Heloc for short. Now, a Heloc works just like any other line of credit, just in this scenario, it's tied directly to your home. And it's kind of like an accordion. Once you have the line of credit, you can raise it and lower it, raise it and lower it. So you could use the money, pay it back, use the money, pay it back. Normally available to you in the form of a 10-year term. So it'll really just depend on how long you've been in the home and how much equity you have, if you're able to do that, and the requirements vary per lender, but we can research and check on that for you. Now, the downside of using the home equity line of credit or second mortgage is that if anything goes wrong with your payments or you get behind on your payment, that affects your primary home, and it's tied to your primary home. So that's a downside. The second thing is those are typically variable rates. So the rates can go up and down and could skyrocket over time. Also, it's not a 30-year fixed rate loan, so it's a shorter term that at the end of those 10 years, your payment could shoot up to a 5-year payoff period. So it's like, could be a $50,000, $100,000, like a 5-year car loan, if that makes sense. So there's definitely some benefits and there are some negatives. That's what we're here for, is to walk through the options with you. And also, you should check with your accountant or your financial professional to see what makes the most sense. But if you are hoping to expand your home ownership options with either a second home or investment property, there are some great options that we can walk you through to get your hands on that down payment. So this is Matt Helton with OneTrust Home Loans. Feel free to reach out with me with any questions on the phone via phone call or text 615-400-6764. That's 615-400-6764, or mhelton at OneTrustHomeLoans.com.